Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro, technicals, and a touch of crystal ball gazing in that specific order. Today is Thursday, February 20th, 2025. Today's episode. Thank you to the donor that recently sent me 2 cents. I find it highly entertaining that it was probably more expensive to send the 2 cents than it was than actually 2 cents. I haven't shown this on my videos for a while, but seriously, thank you for watching. Thank you for the likes, and thank you for the subscriptions, and thank you for the 2 cents. Feel free, everybody, to support the channel however you please, however you desire. It is much, much appreciated. Second item on the agenda, discussion. What's your game? I recently got into kind of a tiffle-taffle, whatever you want to call it, on some comments in one of my recent videos. Someone that cares a lot about being right. The reason I want to bring this up is just simply to suggest, just to say what, when you're doing any kind of investing activity, you do need to understand what your game is. What your game is, no matter who you are, it's probably different than what my game is. Everybody has, they're at different ages, they're at different stages in their life, they have different financial goals, and they also have very, very different ability to be able to stomach different amounts of volatility, as well as there's lots of people that trade for different reasons. There's people that care about value investing, safety as the two primary things, like myself. And my third thing is macro. That drives a lot of my decision making. Then the third thing is the technicals, and then, it's all guesswork really after that. Whenever you're, one of the important things about knowing what your game is actually to not change it. To say, okay, this is how I think things are. This is how I'm going to invest. And then you just do it. What happens a lot of times is, you'll get, for example, people that buy something based on technicals because they think it's going to go up and it goes against them. And instead of getting out of it, they then turn it into an investment. You never want to do that. You never want to go into something saying, okay, this is a technical trade. Okay, now I'm going to hold it because, it went down and, it'll eventually go up, I hope. That's not what I do. I don't cut my losses. When I see an opportunity of something that seems ridiculously cheap, I buy it and I'll wait until I die to see it go my way, or until it dies, or until there's some development that changes my mind other than simply the price not yet being favorable. But seriously, everyone needs to know what their game is, know why you're doing something, know how to get in, have a plan for getting out as well. There's this book that I've been reading lately. Well, actually, it's not just any book. It's one of the main, most respected books out there, Common Stocks and Uncommon Profits by Philip A. Fisher. He mentions in this book how if you start investing early enough, it's been proven that taking a lot of leverage at the beginning of your investing journey pays out way better over time, even if it basically goes to zero like multiple times within the first 5-10 years. There's a strategy in that book that he discusses, and that's the reason I bring it up is only a tribute to the power of leverage, and how it relates to how well as an investor you can deal with something going against you, maybe massively. Can you be okay with seeing a 50% drop in what you have? What's your time horizon? Are you a long-term stock investor? In 10 years from now, it's very, very likely, if not guaranteed, that the prices of the stocks that you own today will be higher than where they are today. If 10 years or 20 years or 30 or 40 years, especially looking out that far time is really the greatest tool that any investor has. That combined with the risk tolerance, being able to see something go way, way, way against you, those two things combined can make you have a lot of success. And then the last piece of this discussion on what's your game, there are 1,000 ways up the mountain. I know my way up the mountain. Do you know yours? I hope you do. Last thing on the agenda, again, next big economic report is the PCE report coming out Friday. Not this Friday, next Friday, February 28th. Until then, unless there's some big developments in the news or black swan events, banks blowing up, you name it, another Japanese yen carry trade blow up, who knows what's around the corner here. If we don't get anything, again, the next main thing is PCE on February 28th. No changes in the daily reminders. Watch macro update 2/11/25 to hear me read through these very important points. These things explain my thought process in regard to where I think valuations are and where I think opportunities are. I highly recommend watching the macro update if you haven't. As I always say, nothing I say is any kind of advice, but I also have a portfolio update if you want to hear me read through and explain my crystal ball readings and my own personal portfolio. No changes. So let's go straight into the charts. The S&P 500 no longer at a closing all-time high, but the fact is that we keep closing above this previous high here. There's bullishness here. This is acting as support, and so it's actually going to be harder to break down through here than it is for the market to continue higher at this point. I'm personally a bit skeptical of this area in general as being as much of a bullish chart as it is. My crystal ball is saying, don't do it, Robschild. Don't even think about trying to, get into Mr. Market right now and his craziness. Nosebleed levels and price earnings ratios just, as much as the chart looks like it wants to go up, I cannot participate and sleep comfortably at night. TLT, still my favorite place to be. Looks like we might be developing, it looks to my eye like some sort of little falling bull flag here. So it looks still like, I think TLT in the short term looks bullish more than it looks bearish. However, overall, we're really just going sideways here, and I'm really not sure. Bitcoin, I've been talking about for a while now, looking so tight today, finally getting a little bit of bullishness in today's candle. As it stands, Bitcoin is sitting at $98.2 thousand per Bitcoin. I mean, this doesn't look like a breakout from this pattern yet, which tells me we could still be going sideways here. I need to see a large, strong candle, to believe, we're headed clearly out of this previous channel. And it looks like we are going to break out to the upside or to the downside pretty soon. The dollar index caught my eye today. It's starting to look more and more bearish to my eye. I know I had previously said, oh, look at this channel. It looks like we're in it. And we are still in this channel. But the fact that we keep having lower highs and lower lows, this is classic. We're going down until something changes kind of a looking chart. Oil not looking as bearish as it has been. It was really February 12th's large, giant engulfing candle of so many previous days that gave the bears a lot of hope for this to go down from here. The longer we don't go down, the less powerful this big red candle becomes. However, we still are within the bearish candle, so it still favors to the downside, but just not as high of a probability as we previously had. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Rob's Child.